Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, guys, good morning. Welcome back to another live stream. As you saw there in the opening, check out DNA Funded. They've got some significant discounts available to subscribers, and they, of course, sponsor and support our stream here. So shout out to them. Thanks to DNA Funded. Cheers to everyone here. Hope you're doing well. Hope you're trading safe. And let's jump into what we've got going on today, which is, of course, unemployment claims and some follow-up from yesterday's wild market activities, where we did see the Fed cut interest rates by 25 basis points. My goal with these shows, whenever I do them, is to pretty much share what I'm trading. What am I long? What am I short? What am I looking to get long? What am I looking to get short? And more importantly, why? Like what reasons should we be looking for specific trades, bullish, bearish, etc.? Well, if you were tuned in yesterday, then you may have heard that I already mentioned I am out of the silver trade. So on a 4-hour chart basis, I did get whipped out of this trade. I'm not too worried about it, to be honest. I got stopped out around here, and price has gone back and forth on silver. I'm actually very open to the idea of staying pretty cash heavy. And what I mean by that is I trade in the stock brokerage. So I know a lot of traders here may use like CFD platforms or Forex platforms, etc., where you're more familiar with the term margin. But in stock brokerage land, you also have margin, but there's cash in your portfolio. Like you literally load in cash to your thing and you can buy shares of stuff. So I buy, even when I'm trading silver, gold, indices, etc., I buy shares of ETFs that track these things. Long story short, I have not a lot of positioning on right now, but there are some things that look more attractive than others. First, before we get into trade ideas, let's just cover what's happening this morning. Stocks are back through their highs. Perhaps not surprising to anyone. Stocks have been on a monster rally the last, several months. That April bottom ended up being one of the most sharp and strongest market recoveries that we have had in a very long time. Nick, do you get charged swaps with Forex positions? So Forex nowadays makes a very small component of what I do personally, but what I typically do when I trade currencies, if I'm trading currency pairs, I have a separate brokerage that I use for Forex trading. If I'm trading currency pairs, typically I like to align in the direction of positive carry, where swaps are actually credited towards you, not debited from your account. You can do that simply by watching interest rate differentials. We have a tool for that within the Edge Finder. If you have the Edge Finder, check out the carry trade scanner. It can actually help you to spot currency pairs where if you are long or short them in the correct direction, you just look at this interest rate divergence and you can actually spot opportunities where it can be very attractive to go long or short. So like, for example, if you're long USD CHF, I don't love the chart right now, but if it was bullish and the chart looked good, this would pay you a nice premium or a nice swap to hold that position long, right? So you can actually trade the carry trade. It is a very common currency strategy for a lot of funds that implement that sort of thing. So might be worth exploring that in the Edge Finder if you have a copy. Just go to your carry trade scanner and you can go through this. But long story short, what are we looking at? Well, you would read this as dollar Swiss franc. If you are on the buy side of the carry trade direction, you get paid essentially about 4.25% per year for holding that currency pair long. Does that make sense? Why? Well, if you're not familiar with the carry trade, essentially you're shorting and selling the Swiss franc and using those funds to invest in US dollars, which pays you interest. See, that's how that works. Carry trade is like the oldest trade in the book when it comes to currency trading. Let's jump into some stuff because again, stocks back to their highs. Nasdaq's up 1%, Russell's up 1.25%. Clearly, stocks are celebrating the idea of more rate cuts. However, to me, I know I'm going to sound like a broken record. Powell called this a risk management cut. And why did he call that this? Why did Powell mention in his speech yesterday that he was calling this sort of a risk management cut? Well, you can kind of hear when you listen to Powell, you can hear what you want to hear, to be completely honest. But I'll try to be as objective of what we heard as possible. He mentioned that there was problems on both sides of the mandate. Inflation sticky, jobs data is weakening. On the jobs data point, he made a really clear distinction that I wanted to mention. So in the jobs market, you have hiring and you have firing, right? People get laid off, people get let go. What Powell mentioned in his speech yesterday was that we're currently still in an environment where hiring is low, but firing is also low. He mentioned that a risk management cut is to help take some insurance in case this side, the firing side, starts to go up. This is the dynamic. You get this combination of hiring slowing, firing increasing. That combination, that creates an environment where unemployment rate, the number of people unemployed, goes up, right? Because right now, if you have a situation where there's not a lot of hiring, but there's also not a lot of firing, people just hold on to their jobs, and we have kind of a slow market, a slow jobs market. But if the dynamic shifts to a slow hiring and firing, then you have a situation where we enter into potential recession. So this risk management cut that Powell referred to it as, I think is sort of playing on the idea that let's try and avoid that from happening. Let's try and at least keep firing low. And maybe we can even see this hiring side go back up. But we can see this in the data, right? If you're a macro person and you have the right tools, okay, Edge Finder, you should buy a copy. If you have the right tools, you can spot this stuff and you can see it, right? So job openings have been in decline for a substantial period of time. Multiple years, we have had declining job openings listed in the United States. At the same time, however, hiring, right? The NFP report has consistently been slowing as well. So less hiring is going on, less job openings are available, but are people getting let go? That's the question, right? So if you get layoffs, that is sort of the last domino to fall in that equation. And here's the answer. Unemployment claims have been not horrible, but you guys are here just in time because in 7 minutes, we get the next reported unemployment claims. Today's number actually means a lot to me because if you're going, well, not to me, but to the market, but I care a lot about this because I'm looking at this, I'm saying, okay, last week we had a spike, guys. Last week, you had the biggest jump in unemployment claims in multiple years. Today, we get our next weekly filing. Is that going to match and surprise to the upside again? In which case, we may be seeing the jobs market going into that dynamic we just talked about, which is hiring slows and firing picks up. That dynamic, not really fun. Okay, so we're going to get some insight on that here. What if it does? Now that we've talked about the macro, I know sometimes people love the macro. Some people actually give me a real quick pulse check on this in the audience, if you guys don't mind. Give me a 1 if you like the macro breakdowns like that, because I just spent like the last 3 or 4 minutes kind of just breaking down macro. Give me a 2 if you'd rather me be more brief on that and get back to the charts sooner. Let me know. Just give me, I am going to get back to the charts, But let me know. It helps me in terms of like my presentations here. If you guys let me know if you like that macro, if you like the understanding of the data in depth, or if you prefer me to do more charts, more markups, etc. Look, technical analysis, I think anybody can do a technical analysis. That's my opinion. I know it's controversial. I think technical analysis is pretty straightforward. I think you can teach a 7-year-old how to do chart markups, to be completely honest. Macro is harder. It is also what moves the markets. So cool. Thank you guys. Lots of ones. So macro it is. We'll stick with the macro. I lost my train of thought here, but let me get back to this, right? So jobs data, we are going to get unemployment claims today. I'm really curious to see how that comes in. If you get another big swing and a miss, I have to drink my coffee before it gets cold. If you get another swing and a miss on unemployment claims and people are, that would show you might be getting layoffs in combination with this. What does that dynamic do to the dollar? Down we go, right? If you continue to see labor data worsen from here as the Fed begins to cut interest rates, that's not an attractive picture. In fact, that's a picture that remains very strong for our metals. Remember, metals typically like the idea of sticky inflation and rate cuts, or, jobs data slipping. As long as you don't get some sort of like, if you get some sort of all out sellout in the markets, gold and silver are going down too, by the way. Let me break you the bad news for you. Gold and silver, if you get true sell-offs in markets, which we're seeing the opposite, stocks are continuing to rally higher. Gold and silver will go down with them most likely, because what will people do if the stock market drops by 10% very quickly or 15% very quickly? What do funds do? They have to raise cash to cover their leveraged bets or their margin, right? To de-risk. What do they have to do? They have to raise cash. How do you raise cash? Well, you look at your portfolio and say, what is up? Well, if gold is up, they'll take that as an opportunity to cash in and take some profits to help allocate it to other places. That's typically what we see in market sell-offs. You typically see a dip in gold and silver. However, the dip is usually brief. Like in 2020, if you go back and do your history lesson on what happened in 2020, where we were, suddenly there was this big surge in fear around, we're going to get a recession and the world's going to shut down. Look, gold dropped along with everything else. Stocks and gold dropped in tandem. But look how quickly the stock market stayed down for a little while. It was still a pretty quick recovery, to be completely honest. But gold almost immediately, a few weeks later, recaptured its previous highs, and we went to new all-time highs. And then, we entered into this kind of melt up, and then we went to a sideways downward market. And then, of course, you had the 2022 thing with Russia, and then boom, up we go as the Fed started to cut interest rates. And we are still seeing that story play out. And so I am by no means looking to try and call the top on gold. I actually think that gold can continue to go higher. However, as I've said many times on the show here recently, sometimes you got to sit on your hands and you got to wait. And so if we get pullbacks in gold, I'm interested. If we do not, there's nothing for me to do here. I had a really great trade on silver. I'm out of that trade. I took a profit on that one. It ended up being a $20,000 profit, which is, to me, it's a number that I would have never in a million years thought I would reach that point where a great trade in my account is 20K. That's a crazy number. Granted, please understand, losers for me are 5K, 4K, $6,000, right? So I can lose a lot of money quickly. So please understand, I'm not flexing without telling you I also have, losses that can be kind of frustrating and painful too. Anyways, guys, we've got the unemployment claims number coming out here in just a moment. Let me pull that up. We're going to watch the data. And then, of course, we are joined by Chris Pulver again. We're going to be taking a look at some charts together. Unemployment claims coming out here. My filters are all messed up. Hold on. Boom. I want all. There we go. Oh, by the way, we didn't even talk about Bank of England. We got to do that here shortly. Unemployment claims coming in here in just a second. Let's see if there's anything surprising today. There was a surprise last week. See if there's anything interesting today or not. So far, no big move. 10 seconds here after the number has dropped. 231,000. So we actually got a better than expected reading here. So unemployment claims came in better than expected here today. Was forecasted to be 241,000. Previously, we had 263. So we actually had a significant drop in unemployment claims. This is arguably a positive thing for, well, it is a positive thing for the dollar. It's a positive thing for the labor market. And that is definitely welcomed in terms of that worry that we had about the state of the jobs market. So definitely open to that. By the way, I just wanted to quickly, briefly mention if if a QR code is easier, use this. But down below me, you'll see you can join the Telegram channel currently. And if you're not already in there, we're posting research and updates and trade ideas every single day for free in our Telegram channel. Make sure to join if you haven't already. The reason I say that too is that we actually have somebody on the back end now who is doing like really in-depth research and sharing it for free in our Telegram channel. We're also showing bonus clips and all sorts of things from the show. In case you don't have time to watch the stream every single day, I highly recommend you join our Telegram channel for free. There's a ton of value in there. Here is the link. If you'd like to join, if you prefer to use the link, click it there. Or you can scan the QR code on the bottom left hand of your screen if you're watching on a TV or something, if that's easier for you. There you go. Okay, guys, what I'm going to do here is I'm going to now switch over and bring in Chris Pulver. Just give me 1 second to adjust our setup here. Boom, boom. And then we can bring in Chris Pulver. What's up, Chris?
Good morning.
How you doing, man?
All right. Just watching this melt up like everybody else.
It's just another day. I don't even really know what happened. Was there, NASDAQ up 1% here this morning?
Yeah.
Was there something I missed?
Just post Fed futures.
Yep. Yeah. Just continuing higher here. You've got just an update here for everyone. Unemployment claims came in better than expected by a slight margin. Dollar is pushing higher in reaction to that. The Dow Jones is moving slightly lower. SPX, these are just timid moves off. NAS is still sitting at the highs. Gold still sort of sitting unchanged here, and oil prices bouncing from those lows we saw overnight around 63.55. Chris, what's on your watch list this morning?
Well, I noticed that we have some decent currency movement in the New Zealand today. So my Aussie New Zealand is hopefully heading up towards that 113.50, 114 target. I've been long that since 107 to 108. So far, so good on that. I know the dollar made a nice little poke yesterday after a big fake out. So dollar was super weak going into FOMC. Right after it, ended up being the strongest currency of the day. So I'm guessing that if you had some trades in the trading battle, probably anything that was like strong dollar through FOMC worked out pretty well, at least in the short term.
Yeah, I guess I was going to go there next in terms of the reaction to the Fed was sort of interesting on the US dollar side of things. You did see actually the dollar index round out and potentially bottom out. You actually said that yesterday. We could see that bottom around that 96.50 level. And we pretty much we touched it briefly, the announcement of the cut, and then a reversal higher here in DXY. My question is, when we look at the dollar index tagging this level, another common thing I've seen all over the internet is this concept. You scroll out to a weekly and monthly chart. You have this long-term upward trend going back from like 2008, the bottom till now. We've had this sort of upward trajectory very gradually in the dollar index. It makes me wonder, there's a lot of trades out there, and I am on this side of the trade, at least currently. This could change, but there's a lot of dollar bearish setups out there. And I'll list just a couple. Gold and silver longs. There's the idea of going international stocks. There's the idea of shorting dollar against other currencies. Obviously, these things benefit from a weaker US dollar. What are your thoughts on that trade? Do you think that trade has more room to run as the Fed, starting to cut rates here? Like, basically, do you think the dollar can continue lower, or do you think we do have a longer term bottom closer to where we currently are?
I think we have like a near-term bottom. I think that in order for us to, pass this stable coin Genius Bill Act or Genius Act, whatever we're calling it, I think that we need to see a weaker dollar. I think that to short manufacturing and bring things back to the U.S., we have to see a weaker dollar. But in typical kind of price play, the dollar index, after having one of the worst starts in 40 years, I usually, similar to this. I mean, we had a really nasty sell-off here in 2022. Dollar was down, spent months chopping around. This follow through, I mean, we hit symmetry. That's what my boxes represent here. So this swing was symmetry right here. And this is why I was long the dollar going into that little pullback. I think at the very least, we just kind of have like a flat pattern. So something like this where the market is able to test those lows, not break them, pull back to some type of range where, this was a previous range. And I think we have another range here. And if we break higher, there's your stronger dollar. If we break lower, there's your secular bear market. That's a continued push towards dollar weakness, which would be gold does well, Bitcoin does well, knowing that the dollar is going to get weaker in order to help, basically help the global economy. For everything in weaker dollars is good. So if we want to bring back manufacturing, which, by the way, I don't know how easy it's going to be or how many jobs will be created by it, but if we bring back some type of manufacturing, we actually have more of a cyclical recession threat, because we're such a service-based and tech-based economy right now with zero manufacturing, that once we bring it back in, it becomes part of the part of our economy again. It means that once we have supply and demand slowdowns, it's going to be felt more often in the stock market. So I don't know. It's just things for the future to think about. But I think short term, dollar strength, medium to longer term, I'm still looking at anything at 100, 101, 102, looking to fade the dollar. I've got levels down to, I think 92 is reasonable. I think 90 is a round number is reasonable. But obviously I'd like to see a price can fill, 100 to 102 area first, before we end up getting a bigger rundown.
Sure. Yeah, no, and just following up on your commentary about manufacturing in the U.S., it's actually been a rough couple of years in terms of the manufacturing PMIs, right? So these are just for new macro traders or newer traders in general. Manufacturing PMIs track a bunch of purchasing managers in the manufacturing component of the U.S. economy, and it essentially asks them at an aggregate level, do you see hiring? Do you see bigger sales orders coming in? Do you see, further expansion and growth? And so, a number above 50 is considered growth is expected by industry leaders. A number below 50 is considered to mean that they essentially collectively think there is going to be decline. And so we have actually seen a below 50 reading for most of the last few years. And so this concept of trying to bring back manufacturing, bring back, more growth in that area of the economy, you can kind of see where the frustration is. This has been a tougher part. And then we contrast that to what you pointed out, Chris, about services, right? The U.S. economy is very service centric. Services above 50 for the last few years for the primary part of the year or primary amount of time. So you can see that you do have a very service-based economy. Bringing back manufacturing in the United States is a serious effort, and in my opinion, sort of a difficult one, considering this is a very mature economy that is, it's hard to compete on manufacturing with places like Thailand or Brazil, or places where there's just a lot more labor and willingness to do that kind of work at cost, right? So we'll see, but it's an interesting dynamic. And I do think that your point about maybe seeing at least a short-term pause in the dollar, you could go sideways for a little bit with the dollar and just see this thing sort of correct sideways. And same thing for things like gold and silver. You've had these big moves. There's very much a possibility that you get kind of a reload or a pullback on these things, though it's not something I'm trying to time. Stocks, again, they just continue to melt up and up and up. And it can be really confusing on what you're supposed to be doing during these sorts of environments. Like, what do you go out and buy, and how do you spread out and diversify? And one of the biggest worries that I have, Chris, is like, if I'm trying to spread out and buy other things to diversify, the issue is that if you truly get a sell-off, correlation, as they say on Tasty frequently, kind of goes to one, right? Everything sells off together. So
right.
I don't know. What are your thoughts on that? What do you do? Do you just keep raising cash as the market keeps going higher? Do you just sort of hold on to what you got and just wait patiently? Or do you go buy bonds? Do you go buy foreign stocks? Do you go buy, commodities? Like what do you do in that situation?
Yeah, I think commodities, gold, silver, Bitcoin, commodities, probably safe for diversifying because those are also the most typically non-correlated. I think what you have to do is hang in there with this melt up. I mean, I'm looking at another all-time high again today for the year, so up to 590. I mean, literally this week it was like 540. Now it's 588.
Yep.
I mean, it's annoying to me that I'm like tongue in cheek, obviously, but I'm not mad about the melt up. I am frustrated that for one of my smaller accounts, my personal account, I have a lot more like short-term risk because I've been taking really mechanical stabs and like I trade this stuff every single day, like zero DTE stuff. This market just doesn't give a crap about going down. And the weird part is, when will it? And we talked about this week. It's like the second half of September is usually bearish. Anyway, back to your question. All you can do is just enjoy this melt up. I don't think it stops. I don't think it goes away. I think that if we have any pullbacks, it's probably a buy the dip. But what you can always do is you can add protection. I mean, a little bit of option trading, adding protection never hurts. I know on my portfolio, if I wanted to add protection, I look at these accounts individually. My beta weighted delta, let me change this to yellow. This means, what is my overall correlation to the market? And, I try to keep this fairly low. And I typically have like a slight tilt to bullishness because that's what the market is designed to do.
Sure.
But when I get these numbers higher than I want, and it depends on what strategies I'm deploying, but basically, like a simple like bear put spread, which is I'm buying a put, selling a put at a lower price. Typically it's out of the money. I use futures a lot to hedge. And oftentimes my hedge is going to be a 10 to 1, a 15 to 1, a 20 to 1, sometimes even 30 to 40 to 1. They're out there if I need them. It only costs me a few $100 and it pays me, potentially thousands of dollars if I need it. So if I'm I'm not buying these highs, dude. I'm not. I can't convince myself other than selling puts and having price just melt up higher. It's like I'm not adding new trades at these all-time highs just because, look, 2024, if you look at the S&P 2024, we had multiple pullbacks. And the fact that we haven't had one at all since, literally our pullback in February, March, April, and the market has not stopped at all. We haven't broken a single low. Our first low that we really had a threat to was post Middle East ceasefire. That would have been early August. That was the last pullback we had at 3%. And then it's been lesser and lesser and lesser. So we've had these like 3%, 2%, 2%. Yesterday was a 1.1% move on the Fed. That was it. And now we're up nearly 1% higher with a gap higher. Just futures ripped. I was watching futures all night. And sure enough, it just like came back and tested tested FOMC and off we go to fresh highs. Now, I mentioned a breakout measurement, which is going to be something to watch today. So we're basically breaking the FOMC candle today futures are up like 0.7%, but this measured move would put us up to around 6,700, 6,705 S&P. So I think going into today's trading, you can see a pretty big liquidity level, gamma level at 6,650. We're already opening up around the futures high around 0.67. So this is something that what's been annoying to me is still wanting to short this market just in the short term. And I'm doing that by just trying to stay out of the way. So again, going back to your question, you got to have protection on your portfolio. I think that it's silly to be 100% invested right now, unless you are at least having a decent stake in gold and silver in something that's non-equities. One thing that is a little high and concentrated is household exposure to equities is as high as it's ever been. Like household exposure is like 60% equities. And I think that in the background, there are things that are moving away from equities. What I'm reading reports wise is institutions are like fading equity positions and adding more gold exposure. So there is like an interesting rotation going on that equities is almost like a lower volume melt up because there's less participation. And I just feel like at some point, any participation in the downside could get pretty ugly. But yesterday, the reason why the market's probably melting up so aggressively today is we had a VIX expiration yesterday. And if you can see that, you know, the VIX was melting up all week to 16.7. We're up like 11% on the VIX since last week. And then after the expiration, it's like all risk is gone.
Yeah.
All the risk is gone, and it's down back to 14 sub 15. And it's just a VIX reset. And now we have a major expiration on Friday.
Yeah, it's an interesting time. I mean, we've gone through this cycle just together on our streams for quite some time, where you see these high volatility, low volatility, and it always sort of feels. I feel that there's a lot more like actionable things to be doing when you do get big spikes in volatility, right? You can roll down and out, sell put positions. If you're an options person, you can kind of like collect premium on that. When VIX is really low and stock market just continues to melt up, we've had this conversation many times. There's a couple things that we've talked about in terms of strategically, what do you do in this environment? Because, for listeners, obviously, if you are somebody who is, if you have significant equities positions, if you're long indices, if you're long some of the cryptos that have been doing really well, like sit back and let the thing run. But the thing you have to be careful about is that when you get these sorts of environments, when they change directions, it is very sudden. It's very hard to sort of once, as you're mentioning, Chris, like if you want to hedge, you have to hedge before the big change. You can't hedge afterwards, right? Like that the price gets very expensive to hedge afterwards. The couple things you can do: you can raise cash. That's personally how I like to do it. I like to, as you continue to melt up higher, just be very selective in what you keep in the portfolio and ask yourself every day, hey, do I want to continue owning this? Do I want to trail up a stop loss on it? Do I want to just take a profit off of it, right? Like think about these things and try not to make the mistake of thinking, this stuff can go on forever, because it does not go forever. But it also can go much longer than any of us think it can. Like we could still see this thing kind of just melt up to 6,800, maybe even 7,000 in the coming months. Who's to know, right? Because that's the thing. These things tend to melt up and keep melting when they are going. But it is painstaking and relies a lot on discipline to not kind of get caught up in the fray. Because if you were to draw that conclusion and say, well, it's definitely going to 7,000, that's where you get yourself in some trouble, because then you start buying calls, you start getting really aggressive. You're like, you know what, this thing has to keep going. And that's the moment where you do get a reset. And for patient people, you can do really well being patient and being ready for the reload. But for impatient people, they will lose a lot of money. It's the old expression said a million times all over the internet that Warren Buffett said: the stock market, or just markets in general, is essentially a mechanism for transferring wealth from the impatient people to the patient people. It's a really important lesson.
Nick, will you pull up the AAII print from yesterday? I think that's one thing that's interesting is we still have a reasonable bearish reading, but the neutral is essentially nothing. And we have one of the biggest bullish readings that we've had in the last month. So having that bullish print at 41.7, that is a big jump, because last week it was 28, the week before 32, the week before 34. So there's a big jump in the bulls that kind of neutralizes the center. And so we still have, that's a bit of a pullback in bears. So 49.5 down to 42.4 on the bears. 41.7 is a big jump by the bulls. So, you and I talked about this week. Seeing that sentiment finally start to jump on the bullish bandwagon, I think also smells like a little bit of a top coming sooner than later, because now it's like, okay, you finally melted up enough. You got through the Fed. You convinced all these people to look at participating in the markets at all-time highs after a 37, 38, 39% rally since the bottom in April. It's just classic terrible timing by most traders. It's like, well, I guess now 40% later, I'll start participating in the all-time highs versus through this market. Yeah. That's a big jump.
And to break that up, what you were saying there, I think is a really important thing for listeners. We're looking at the AAII Investor Sentiment Survey. This is a weekly reported survey that shows what individual investors think about the stock market. Now, I know not everybody here trades indices or stocks, but understand that this is a good barometer of risk on versus risk off sentiment across all markets. And what you pointed out, Chris, I thought was really worth mentioning is that bears declined, right? So there's slightly less bearishness. Then there was also a jump in bullishness,
Big
but
jump.
really where this jump in bullishness also came from was from the neutral camp, as you pointed out, dropping down. So people who were on the fence started leaning in bullish.
Yep.
So we have some capitulation. We can also see this. We built some cool charts around this. Bullish sentiment versus bearish sentiment specifically drawn out over time. And what you can see here is that bullish sentiment had been on the decline up until the last jump here that we did see. So we did get a substantial jump in bullishness and a modest decline in bearishness. So just worth mentioning that the bullishness came from neutral people who jumped into the bull camp.
Yeah, and I think better late than never. after literally a 40% recovery rally, we're talking about now we're convincing people that it's probably good to be long equities, and I think that's a good opportunity for shakeout. I mean, the probability of getting up to 7,000. Sure, it's probably higher than before, but I still think that the near-term risk is probably more to the downside than is the upside. The upside, as we typically see, is slow, drifty, melt up. In fact, I mean, last Friday was a nothing burger. Monday, Tuesday, even all of yesterday until we had FOMC was a nothing burger. Nothing was happening. Markets today, like gapping higher. I mean, futures was up about 0.8% this morning. Now it's 0.6. And not that matters. It's like we're clearly going to gap higher today. And question is there follow through? Are we gapping higher, still pushing higher? Are we gapping higher? Are we going to have a bit of a, is this like that kind of capitulation blow off type move? I will say this, Nick, based on where we gap today, we could be reading, I'm going to go ahead and judge this on the SPY, but if we go to gap higher, last time we got this high above the 50-day moving average, that was about 207 or 27 points. We're looking at about the same thing. That's 250. We're at that same level where I just think the market, gets a little bit of a pullback towards this magnetic 50-day. It did it here July to August. It did it here shortly after. Here again, 250 to 275 points, 300 points is like very extreme. So if we get to 300 plus points above the 50-day, again, for me in the short term, I'm probably calling a bit of a top. I'm selling some bear call spreads, trying to grab some income there. But it's like, please hit something. Just make sure that I'm not taking crazy pills and that the market can have some semblance of a technical pullback. I didn't get a chance to show this earlier, but the fact that we had a 5% pullback last year and then a 10% pullback last year and another 3 to 5% correction and another 3 to 5% correction and a 6 to 8% correction, the market still went higher. But I mean, it's like what I wouldn't give to have a pullback that we can actually position for instead of watching this minus, it's like a 1% pullback, a sideways day, and then it just gaps higher. I'm like, this is really frustrating to want to buy the dip and not be given the opportunity to buy the dip.
It is. It's almost comical, Chris, because the thing is, what this reminds me of is 2017, where if you remember 2017, some listeners may have been trading, but I know Chris and I were, and during 2017, it was one of the most mind-numbing, low volatility years. We had you want to talk about, like, let me just show this really quick.
Every month was positive. In the
2017, you practically shouldn't have been trading. Like, there's no point in trading. You should have just been sitting. I mean, this is hindsight, right? Looking in the windshield or the rear view mirror. Like, there was nothing to trade. Like, as traders, we like pullbacks, right? Pullbacks give us opportunity to rebalance, to restructure, to reallocate, to redistribute. The traders thrive off of a little bit of volatility. Traders, well, I guess it depends your strategy, but index traders or index, buy and holders, they love a year like this because this is the sort of year where it's just like, there's no point in getting in and out. It's just, you just hold it. And it can be very easy to draw the conclusion that, this is how the markets behave. And look at how clean, if the market always looked like this, there would just be no point in trading, right? Because it's like you just buy that thing and it just trickles up and it trickles up and it never, this was one of the most frustrating years if you were on the sidelines. And I tell this story frequently because this was early in my trading career. I was still really learning the ropes, to be honest. And so I watched this market just go up and up and up. And I was like, I want to buy stocks. Well, be careful what you wish for, because all of a sudden you get a 2018 where you just had these, as you just pointed out, I heard somebody do the math. I'm not going to count them out here, but it was like over 15 times where you got like a 5% plus correction in the year, right? So you just had a whopping 12%, and then an 8%, and here was a 5%. And, you just had more dips than this was a terrible year to be sitting in index funds.
Volatility finally came back.
Yeah. Volatility came back. And then you got into 2019. There were some dips in 2019. There was stuff to do. And then you had 2020, the absolute volatility blowout. So the point, I guess, is because Chris and I have recited those history lessons a million times, but for new listeners, you have to understand this is so mind-numbingly frustrating when it's happening, but be careful what you wish for, because suddenly it will change. So if you're somebody who's like, I'm throwing in the towel, I'm buying, it's just going up every day, be careful, because markets, if they became that predictable, if they were that easy for too long, the commoner would win. And that is not what the market gods want. The commoner should not, win in the long term.
Yeah, and I think that if we proceed this way where there's minimal pullbacks, then I'm just expecting another big volatility type event or volatility window that's going to be 3 to 6 months, 6 to 12 months, and we'll have more 5 and 10% corrections. And ultimately, the market's going to try to do its best and still grind higher and still go higher, but it's not going to be without having this is mind-numbing upside. Then it'll be like head spinning volatility where it's just going to drive you crazy thinking like, is the market going to crash or go to a bear market? I don't think that, if you think about the mechanisms in the markets right now, it's like we've done everything in our power to avoid ever having a recession ever again. Never all at once. It's going to be like a transitional recession where like certain sectors feel it, but nothing all at once. And this, obviously, this is even beyond COVID. If you look at 2020's price action, COVID at least pulled back and got back to all-time highs and stalled for like 8 to 10%. This is even different. This ripped up through all-time highs, and the only pullback we saw that was even meaningful was that July 31st to August 1st. That was it, dude. And this market has been, I've been looking at, okay, is this a rising wedge? Is this a 3-drive pattern? What's going to be like my top? It hasn't rolled over yet, and we haven't broken lows yet. So I sit here with a rising wedge look at it's like we're at the top of the wedge, and this comes from straight up pattern trading in currency land. But until we break the right side of the wedge, if you can see my yellow lines here, until we break the right side of the wedge or until we take out a low, this market's not interested in going lower. So that's ultimately what it comes back to, is like price will tell us when it's time to roll over, and maybe it looks something like this. Maybe price is going to, hit this high, stall up here, break some support, break some floors, and now we're in some open space to have a correction back down to where this wedge started. But that's probably about it. If we flush down to, there was a huge level this week at 6,500, which was a massive JPM collar trade that, dealers and flows are pretty much running towards or using as resistance. And it stuck there for a couple of weeks. But as soon as we drifted higher, it became less and less significant. And once we got through the VIX expiration yesterday, here we are back up to all-time highs with a gap higher today. We do have I think it's a record-breaking OPEX on Friday that's going to be triple witching.
Yep.
So you have all your expirations coming on Friday. It doesn't really mean anything. I still am curious how the back half of September plays out. But I think I might have some poor timing on a couple of my short-term trades. I have a 66.40 on Friday that I'd like to see price stay below. But it's right in the thick of things. And if we, hit 67 by Friday, I'm kind of toast on that trade. But I've got 67s and 67.50s. And, I've just been taking bites at these highs to see like, all right, can this market stop going up for a second?
With that trade, Chris, would you roll it out? Would you give it more time?
No, because I'm just let it. Of course, I'd like to give more time. I'll see what it looks like. If I roll it, I'll give it more time, meaning like maybe go out 30 days. But I'm probably gonna have to roll that to go higher. Or if I roll it out to the end of the month, maybe, because I did take it for a credit. It's a broken wing butterfly, which is essentially like a big bear call spread with a bit of a profit trap. If I roll it out to the end of the month and keep the strikes the same, I might be able to roll it for a credit. But if I'm rolling it for a debit or rolling it for a deeper hole that I'm digging, it's just not worth it. It's not worth the roll if I'm going to roll it for a deeper loss. Sure. So I might just accept it for what it is. Maybe I get lucky. Maybe we're back down to like 66 by Friday. Maybe we're honestly, as long as I'm below 66.40, I survive that trade. And there is a profit trap in there for $500. So we'll see. But that's really the only one that's threatened, because by the end of the month, as long as we're below like 67.50 or 68, I'll survive the end of the month with probably, $1,000 worth of profit. So we'll see. But today is annoying to say the least. And I'm watching this like futures is fading. a little bit. Doesn't look like much, but at least on the smaller time frame, we have been melting up all morning. And so just look at, here's the FOMC noise from yesterday, and we've melted up. We're pulling back into like the highs. So I want to see how this price action plays out in futures, because if we go high from FOMC, low from FOMC, and this just melted up and gave it back, what happens today? Are we going to bounce here and go higher? Are we going to give it back? And this is just that little melt off top, and we're coming back in where, way to go FOMC, you made a new high, but the market couldn't hang on to it. So I think that's price action to watch.
Yeah. And I'm going to go ahead and throw my 2 cents on that one, is that I do think that the S&P 500 is, in my opinion, is more due to roll over. You mentioned it earlier too, the risk to the downside. I would agree with that. I think that you look at indices, you look at risk assets. Yes, you're getting rate cuts, but you're also getting acknowledgement from the Fed that, and I'm a macro guy, so my macro basis tells me you're also getting observations from the Fed that there's severe, risk to the labor market. Calling it a risk management cut, to me, it's just not an environment where you want to just go run with your tail between your legs buying stocks in Bitcoin, because again, we may, most of the time, when you have a huge market sell-off, it coincides with jobs market data weakening. And so you have to be careful with that. So Chris, we're out of time here. Before you and I get out of here, let me just mention to viewers that if you're interested in getting access to the trade alerts being shared by myself and Chris Pulver, you can explore our website, a1trading.com. You can also find specifically Chris Pulver's trade alerts within our group by navigating to the Pulver Alerts service. Also, if you have questions, if you're an existing member and want to add Chris Pulver's trade alerts to your roster, you can do so for significant discounts using the link that's just been dropped in the chat to speak to our support team. Just let them know you're watching the show and that you want to get access to Chris Pulver's signals, and they will add that to your existing. I know we got a lot of members who watch these streams. Chris, we're out of time. Thanks for hanging out with me, and we'll see you back on the next one, man.
Sounds good. Thanks, Nick. See everybody.
All right. See you guys. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Okay, what's up, people? Hope everyone is well. Glad to be back. Interesting markets to go through. Any pairs, any markets you're looking at, feel free to drop it in the chat and we shall discuss. Personally, it's been interesting. I was in some longs and pound USD, which I just got trailed out of, and I'm a little bit disappointed, if you will, in that position. I mean, pound's been pretty bearish the past kind of maybe 12, 24 hours. And of course, we just had some interest rates for pound as well. And looks like we reacted pretty bearish to that as well. But I was in some longs yesterday around here on the 15-minute chart. Really nice move to the outside. I unfortunately got trailed out. Maybe I did move my stops to breaking a little bit early, but price has been really aggressive since then. Of course, we've had FOMC and plus pound interest rate. So price has been reacting interestingly. Now, going into the dollar, my bias for this one is still bearish. I mean, price has, of course, swept the lows. It's done its job. So I'm not really actively looking to sell the dollar as I was coming into the week, because when I am looking for opportunities, especially when it's trending opportunities, my bet is always if the trend's going to continue, price is going to pull back and then at least reach the prior low. And once that is done, it's kind of like, okay, I'm kind of taking a step back a little bit and waiting for price to either have another pullback or continue to rip through or maybe consolidate. I'm waiting for price to kind of unfold its next plan of action. Is it going to reverse, continue, pause? I don't know. And that's the situation I find myself in with the dollar. we've just gone and created the new low. So my plan for the week was, can I take advantage of that push? Because I believe we opened around here. So my expectation was, okay, the trend looks like it's going to continue. That means I expect those lows to go, or at least be tested. And that's exactly what's happened. So is this potentially a reversal? Is this potentially a double bottom? It's way too early for me to justify that at this moment in time. It could be, but in terms of probability, if I'm looking for a good probability opportunity, I don't really have that to the upside just yet. I need to see a lot more strength for me to be convinced that, okay, this is potentially a bottom, because all year, we started the year, Jan 2025, up there. All year we've been falling. This could be the bottom for the year potentially, or at least for a period of time. And maybe price does reverse, but like I said, it's too early to say. And in terms of the shorts, I think shorts are still a good play, but be careful because, of course, price has just shown us we're having a bit of trouble at the lows. So even coming back to structure here is a nice place to short. There was a nice short this morning intraday. Nice reaction at the high, nice push down. Hasn't really got going yet. Looks like dollar strength has kicked in this afternoon, especially with the news that's just come into play. So USD strength is here, but to what degree, I just think it's a bit too early to say if this is going to be a reversal or potentially price is going to put another lower high in. If you look at the 4-hour chart, look how consistent we have been with these lower highs over the past few weeks. Who's to say we can't put another one in? Judging this momentum, I'm kind of just a bit 50-50 at the moment. So USD side of things have been pretty bearish. Now I'm a bit more neutral because of those reasons where we're located, the rejection we've just seen. I don't want to keep actively looking to short the dollar. I don't think that's a good opportunity anymore right now. And I wouldn't be looking to buy because it's just too early to be looking to buy. The market is still quite bearish there. So that's why I'm kind of 50-50. But $1 pair I do like the look of for more of a swing opportunity is dollar CAD downside. I'm pretty bearish on this one. I do think price can still make a move to the lows. Kind of the same concept I just mentioned in terms of when I'm looking for a trend. When I'm looking to play a trend, let's say a bearish one, if price pulls back, if I'm expecting that trend to continue, that means I'm always looking for price to come back into the low. So that's my target, not necessarily for the trade, but that's my target for the market. So I'm looking to short, I'm looking for price to eventually get there. That's the move I'm trying to take advantage of. And that's the same situation for dollar CAD. We do have a bearish trend, which I'm expecting eventually to continue. But at the moment, it's just a bit of an awkward place for me to sell the market because we've just come from a really aggressive support level. As you can see here, really aggressive, 1, 2, and 3 again. So I'm not going to actively try to short into that. I'd rather either price pull away, potentially give me another lower high like we did 1, 2. Oh, that's a big circle. 1, 2, and 3. So something like that could look good. Probably a few days, maybe a week or two away from that forming. So I've got to be patient for that. Or just break support and then things become really, really clear cut in terms of, okay, the bears are clearly winning here. Buyers can't hold support anymore. And we probably are going to continue back to the lows there. And then my plan would be pullbacks along the way. So dollar CAD, I quite like the look of this one. But way too early for me to get involved. And yeah, we'll see what the USD strength has to play. Yoshi, thoughts on the Dow Jones? Yeah, we can take a look at that. No problemo. So yeah, beautiful move yesterday. I can't lie. That was a really nice break and retest. If you're looking for a break and retest in a textbook, this is probably what you'll see. Clear resistance with all these wicks. Clear breakout with that candle. It's not like a kind of a slow corrective, really commanding breakout. Lovely retracement, nice test, few wicks into the level, and yeah, push back to highs. Really, really textbook from US 30 yesterday. However, what's the next move now? Well, the market is still bullish. I would still say we're still fighting higher. We're still seeing higher prices. We broke through a very significant level not too long ago. Had a nice break and retest there as well. Although also a nice textbook example. So I would still keep looking to buy. I am seeing clear signs that we are troubling highs though. So I'll probably be looking for a deeper retracement. I wouldn't be trying to find like break and retest at highs. A bit too aggressive. I would suggest intraday, if you could look around this area, as long as price doesn't take out this low. If price was to break through this, that's where I would start to say, okay, maybe US 30 is going to have a bit of a counter trend move. Not necessarily become bearish, but maybe it's time for a bigger retracement because we've seen these smaller retracements. Maybe it's time for a big one if this low does break. I like this area here, brief consolidation, strong break to the upside. We could see price come and test that. Or again, we could see price come back and retest the same support level from yesterday and have another go. As long as we stay above 45,732, I think the buys are justified. If we do crack through that area, that really doesn't look bullish to me anymore, and that might mean some more downside for next week or the week after. So yeah, buys for now still looking good. This is the low I'd pay attention to. If we can stay above that, the buys look good, breakthrough. I definitely wouldn't be looking to buy. I mean, again, I would expect us to eventually push to the upside, but I would have to wait for more complex pullback, which might take a while. And there might actually be some nice shorts in the meantime. So yeah, US30, that's kind of my idea for now. CAD Yen, I was actually looking to buy CAD Yen. Unfortunately, I didn't quite get the entry I was looking for. Maybe I was being a bit too particular, but I'm very strict with my entries and how I look to take them. I was looking for price to come and sweep the low here, spike through, and then get the buy. Especially when price has found support quite a few times. I really like it when price will spike through and then move. It doesn't always happen, but that allows me to get a really good entry with a really good stop loss as well. Because if price can, pretend to break through the level, maybe a nice wick, and then recovers, if I can get my stop loss there, I'm very well positioned. And in this case, price didn't quite do that. It tested support again, really nice reaction, but not quite enough for the entry. But the bias is still the same, no matter with the wick or not. The bias is still the same. I'm looking for the continuation of this trend. The way I see it, price has had kind of like a weird pullback because we did have this trend line which price did break, but we haven't really seen any commanding bearish momentum. So when I'm looking at price breaking through a trend line, it needs to be really aggressive. That will indicate that, okay, that trend's probably of no more significance, and maybe price is gonna change direction. If it's it broke, but now it's finding momentum again, it's finding support, I don't really buy into that too much in terms of a reversal, and I'm still looking to follow this trend. And this is still the low which gave us the high. So technically speaking, on the basis of market structure, we're still bullish. So the way I see it, CAD Yen's had another pullback. It's found support here. We're seeing some really aggressive momentum. I do think we'll probably see price make a move back to resistance. In terms of actually buying CAD Yen, that's where it gets a bit tricky. It depends on the time frame you're looking at. We are coming into resistance here. So what I would suggest maybe, if you're looking for the slightly later entry, would be waiting for resistance to break here and then looking for some pullbacks intraday. That could be a smart move. That way you can also maximize your risk reward. So entries on a retest, something of that nature, stops below the low and then target the high. Because if this is a higher low, then we're likely to get back there. And especially if price breaks resistance, then we're very likely to get back there. In terms of buying now, it's a bit awkward because, like I said, we're in that range. So if you're going to buy in a range, there's only two places you're looking to buy. It's the low or if it breaks out. Anywhere else is just a little bit not optimal, especially when we're in the middle. That's where all the noise or the fluctuation is. I would try my best to avoid trading in the middle of the range. Even if there's a good setup, it's probably not the best conditions for it. So we're seeing a lot of strength, which is great. I would wait for the breakout and then longs after, or if we do miraculously come back down to lows, that's great as well. We could probably find some buys there too. But yeah, I do expect a lot more upside for CAD Yen now. I'm pretty bullish on the yen pairs. Yen is looking pretty weak still. If I have a quick look at the yen basket, then I'll go for another request. If I quickly take a look at the yen basket, yeah, yen basket is not doing too well here. And this is the yen basically against a lot of other major currencies. So CAD, Aussie, pound, euro, dollar. And if this is trending down, that means yen is particularly weak. And then you should be seeing the yen crosses push up. And that is the case right now. And I'm looking at this low here. And if price can manage to break through support at, what's this, 62.80, I think that's where price is probably going to end up next. And basically the trend we've seen for most of the year since April is probably set to continue. I mean, we've had a few attempts trying to break the high of the range. You can see with all these wicks, strength has tried to come into play, but hasn't been successful. And we're seeing a lot of strength right now with the sellers. So crack support here, probably take us to the lows, and that should push CAD yen to the upside. I think CAD has been relatively strong as well. So you might have a nice strong currency against a weak one potentially. But yeah, not looking too good for the yen at the moment. Euro CAD, is that US CAD as well? I mean, in terms of some of the CAD pairs, I mean, CAD is a little bit strong at the moment in terms of like the past maybe 24 hours-ish. But in general, dollar CAD, I'm pretty bearish. I'm pretty bearish on dollar CAD. I do see more downside for this one, but I wouldn't say the chart is ready to be sold. We are still respecting support, which is not really what you want to see. As a seller, if I can see price breaking through that, then I think there's opportunities. In terms of EuroCAD, I'm actually looking for this to form a top soon. I do think the trend has been phenomenal, but I do see this running out a bit of juice. We've taken out some highs on the monthly chart, which we haven't done in a very, very long time. This dates back to 2018. More so resistance in this area. We have just gone and punctured that. And I do think price is a bit extended. We've taken out some major highs. I think naturally we could see just a bit of downside here. I'm not necessarily saying price is going to reverse completely. Maybe the market's still going to trend higher. I think naturally we could see some buyers exiting their positions, a natural pullback, then maybe we might continue. So I'm not really interested in following EuroCAD to the upside anymore. I think we've already had that move. Maybe there is still a bit more upside, but I do think the bigger move for now anyway will be to the downside. So I'm interested in shorting EuroCAD, but I have to be careful still because this is still a bullish market, and taking any shorts here, you're still playing with fire a little bit. But I can see this channel price has been trading in, respecting lows, highs equally very, very well. Looks to me that price is back at the highs, not performing too well. Looks like we're rejecting. And I do think shorts could be coming into play. I mean, you could take some shorts at the high here and stops there. Like I said, it's more of an aggressive trade. We'll really go up against it. A more cautious trade could be waiting for some intraday position. Let's say price makes a move down, and then we start to find resistance somewhere. That could be something to look at. Of course, your positioning in terms of your stop loss might not be best because ideally your stop loss will be best above the highs, but you can maximize your risk reward that way. Of course, there's some compensation with maybe the placement and maybe the win rate, but it's up to you how you want to manage that trade. In my opinion, I'm looking for shorts in EuroCAD, just being patient with it, but I'm not looking to follow the trend anymore. I think it's had its fun. Okay, where were we? BTC, yeah, we could take a look at Bitcoin and NAS 100. We'll go through pound as well. Yeah, pound USD is falling at the moment. Interesting stuff there. I was very, very bullish going into the week for pound. I mean, we did see that bullish move, from FOMC, so it's kind of did what I expected it to do, but I didn't expect it to be coming down as hard as it's doing now. So we'll take a look at that. But I'll quickly go through Bitcoin. So Bitcoin, yeah, looking bullish. I do think Bitcoin can just reach back to 120K. Really big psychological level. This is the former high of BTC, and at this point, it looks like price is just slowly making its way there. I would say one thing to know about BTC is that we're not really showing the strength anymore, because Bitcoin in the past kind of few bullish cycles, we have like really corrective periods, then price explodes, really corrective period, price explodes, so on and so forth. Now we've had a bit of a corrective period, price is not really exploding. Now that could pick up in the next few days, but if we stay very slow, might just respect the highs again. So I'm not as, I mean, Bitcoin's still very bullish. I'm not saying short the highs at all, but I would say keep a close eye at 120. Unless we start to see that impactful momentum, maybe we do reject again. In terms of the lower time frames, though, I would just be looking to buy. Coming into the week, I mentioned this area. I said this looks like a really nice place for a buy. Price was kind of very sideways, very choppy. We saw some strength here on a breakout. Naturally, coming back to retest that would make sense for a long. Unfortunately, didn't quite see that happen. The market pulled back, but just not buy enough, essentially, or at least to my standards anyway. Now I've seen some strength again. I would still say we'll look quite choppy here. So I would suggest maybe another strong push and then maybe another pullback after. Although we are running out a bit of room, 120K is just above our head. So BTC, I would still like that bigger pullback if we were to do that. If not, you might want to scale lower and take advantage of some more minor pullbacks and ride that higher. But as soon as we get to 120K, I would be a bit cautious there. You can see how prices reacted on 2 prior occasions, really aggressive reactions there. So 120 is definitely a place to watch. And of course, if we can break through that, happy days, we should see BTC trending well again. Maybe 130 is the next stop. As for pound, so yeah, this is pound. So pound, my target this week was a push back to resistance, which we did that. We wicked into that, and of course, price has had a really nasty rejection. It's going to be interesting to see how this weekly candle does close, because you can see for the past 1, 2, 3, 4, 5 weeks, price has been really struggling at resistance here. And then we saw this really big move. I thought price is just going to continue and probably break highs and so on and so forth. But looks like potentially for 6 weeks we're struggling to break this high. Of course, it is still Thursday. We could still recover that. But if that's the case, then we could see the next week, so week 7, us continue that back into support again. And there might be some really nice shorts next week. But I would wait for that weekly candle to close. So I'll investigate that again on the weekend. But dropping to the lower time frames, the key resistance, the key level where my focus lies is this level, which is the same level I was referring to on the weekly candles. Is this level here, which is what 1.358. So it's make or break here really with pound. If price does break below this, I'm trying to see if price does break. It depends how we break, because I'm still looking at this structure in terms of low, high, low, high. Price could still pull back from another higher low somewhere. We've got a nice makeshift trend line here, and we could still trend higher. But would I be looking to trade that personally? No, I wouldn't be convinced. The plan really was for price to break this and stay above it. If it does come back down, it does put me off the buys. And if anything, there could be some nice shorts at play on the retest of this level. Let's say if we do break below really aggressively, this becomes resistance again, and that becomes a nice short. I wouldn't necessarily be banking on a complete reversal. I think it's a little bit too early to suggest that if pound's going to top out here and completely reverse. Way too early. Don't have enough information to decide that. But yeah, if you do break underneath, I would suggest a quick retest of that level. Especially intraday, you could probably find some nice shorts there. Especially if the break is really commanding and has a lot of strength. A pullback back onto this level, that could be a nice short for a day or two. So that's something to keep an eye. Of course, we haven't done that yet, and we very well could find support. So keep an eye on that too. But that's really where the focus is for pound. But yeah, you're right. Pound USD looking really weak right now. Of course, DXY strength's having its say. I think that is probably the orchestrator, but I think pound is also pretty weak at the moment right now. But DXY is going to have its say in things. Okay, I'll go through silver. Hey, thank you, appreciate it. I'm glad you're enjoying it. Okay, I'll quickly go through NAS first, and then I'll go through silver, because I did say I was going to go through NAS, but I forgot. Anyway, let's get to it. So NAS 100 looking really bullish. Yeah. The thing is, with price now, it's not like I want to do anything really. It's because we just made the new high, so I wouldn't really try to force anything right now. I wouldn't try to force some buys right now. I think we're quite stretched. I do think we're probably due a bit of a pullback. If I drop to like an intraday chart, I mean, this is not bad. This is not bad for a buy. I like it because we had a brief pause, price ripped to the upside. But I would suggest, let me go to the 5-minute chart. I would suggest maybe, because this was a really aggressive move down, maybe if you push up a little bit, push down again, and then that could end up being a nice buy. I never really want to be the first person into the move, especially after such an aggressive move down. I like it when maybe we push up a little bit, come back down, and then I time my entries there. I kind of like the psychology around it. Getting in straight away leaves me a bit vulnerable. At least that's how I look at it. So, yeah, I mean, intraday, I mean, this is literally the 5-minute chart. I don't really trade the 5-minute chart, but I would drop right down if I'm looking for buys, just because I'm not a big believer in, continuously buying at highs. I like to buy dips. If market is bullish, great. I'd rather, price runs out of steam, pulls back, and then I try and find the next low for the next move. Right now, we had the low, prices just rip highs, so I don't really want to be buying here. I'd rather price fizzles out, and then we can talk about the next buy there. So because of that, I would scale right down and just take advantage of some small intraday position, almost scalping. That would make sense to me. But from a 4-hour perspective, I wouldn't mind a bigger pullback to come back and retest some of these highs here. That would be a nice idea, but that's probably still a few days away. Okay, silver, I'll take a look at. Gold 1 to 2 short. We can take a look at gold as well. So silver, silver's having a bit of trouble. I like this range here. Price had a lovely consolidation, spat out some nice momentum, and it looks like we've come back for the retest. Now I did analyze this morning on my channel, and I mentioned that although it looks like we're finding support here, we're not really seeing significant momentum. It's not like price is starting to break away. So I did mention in terms of looking for a good buy in silver, either wait for price to come back into lows and then try and pick another low, just repeat what price has been doing, or wait for us to clear resistance. So basically wait for momentum to re-enter the market and then look for pullbacks of that. Now that would be something interesting, because now we're getting already signs that silver's picking up strength. Buyers are coming back into the market. Resistance is not holding. Now there's a good likelihood we do make a way back to the highs. So the pullbacks after will make sense, and you probably want to drop to like a 50-minute chart to take advantage of that. But I am pretty bullish on silver. The only way, I was about to say the only way I'd be bearish if we take out that area, but I wouldn't even be bearish if that happens. I would be bearish if maybe we take out this low. I'm pretty confident in the silver long bias right now. And actually, I wouldn't mind if we do have a bigger pullback. Silver's been pretty stretched with this move. If silver does decide it wants to have a bigger pullback, that's perfectly fine by me. It probably gives me a good opportunity to get into a nice swing position to take this back up. So yeah, a lot needs to happen for me to be bearish on silver. Of course, there could be some selling opportunities along the way. In terms of my bias of where I expect price to go, the trend is still healthy here. So yeah, I do like the bias with silver, so that's really the play I'm trying to focus on. So yeah, looks like we are finding support here, but lacking some momentum. You could wait for that to go and then look for pullbacks afterwards, or try and pick the lows. Bit more aggressive, but it position yourself well in terms of risk to reward and just having a stop loss in an appropriate place. But yeah, if this doesn't hold, then around 39.6, basically coming back to retest the high here, is where the focus will be if this area doesn't hold. And in terms of gold, its partner in crime. So yeah, gold's interesting as well. It looks like it's just in a similar situation to silver in terms of, okay, we've got another consolidation. Again, spat out a lot of momentum there. Price came back to retest it, and I do expect more upside for gold. Gold's a very bullish market. At some point, it's going to have a bigger retracement, of course. Is it now? Maybe. Is it next week? It could be as well. I'm not really in the business to try and predict exactly where the high is, because I'm not looking to trade it really, so it's not really too much of my problem. My problem is the buy still looking good? I would suggest the buys are still looking good, especially in this area and the wicks we've had early this morning. But I would say we're in a similar predicament to silver in terms of momentum's kind of fading a little bit. It looks to me that price is kind of trading in this channel, so to speak. And, if we could see the break of that channel, that's where momentum will lie. So I do like gold buys, but I would suggest we do need to stay above this area. If price does end up breaking here, then that could mean we do form a lower high and perhaps trade lower. Maybe it is the start of the bigger pullback. But for now, as long as we stay above this zone, I'd still like the buys. And if you're looking for entries, I would suggest maybe another push to lows and then looking for opportunities there. That way, you can take advantage of a swing back into the high of the channel. Maybe you take advantage of the breakout. And if price doesn't have the breakout, if it does come back down, you can still probably walk away with a nice opportunity there as well. Okay, day trade. Yeah, I mean, for day trade makes sense as well. So you're planning to be out by the end of the day, pretty much. I mean, we've had that initial momentum this morning. Now price is kind of stuck a bit at the channel, so I'll be a bit cautious there. But I think intraday, I kind of like that swing there. Long term, of course, still very much bullish and still on gold and silver, but I would be cautious with that area. If it does break, I will relax the bullish bias and maybe wait for a deeper retracement. But anyway, guys, it has approached the end of my segment. I do appreciate you guys for listening to myself. I hope you have enjoyed it and found the analysis useful. I will be live again next week on this channel as well, so I do look forward to coming back. But guys, thanks for tuning in. I'm pretty sure my links are there, so you can check me out. But yeah, thank you for having me, and I'll catch you next week.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello, ladies and gentlemen. How are we doing today on this fine Thursday? Is it Thursday? Yes, Thursday. So we had an eventful day yesterday with the Federal Reserve. I'm assuming that Nick's already gone through that stuff with you. However, if he hasn't, or if you still have questions, let me know and we can go through it. Because I've been doing some research on it this morning, going through everything that was said, all the statements and dot plot and the SEP, etc., etc. So well rounded on that side. Anyway, in the meantime, euro dollar's at quite an interesting point. So it's coming up to a very similar level that it did last year, around the same time actually. So it was around August, September last year when I was shorting euro dollar. Right at this point, I pretty much called the top, and we saw it go down towards parity. Now, oh, sorry, hold on. I'm looking at the wrong. This is a monthly time. Ignore that. Sorry, monthly time frame. Wrong. I'm talking about the wrong point. I was shorting it here. Anyway, what I was trying to say, euro dollar is coming up to a very, very interesting point on the monthly time frame here. So we are at a 50% retracement, and this is taking the high at 1.4 all the way to the low that we've got down here at 0.95. Now, I'm not going to do anything with this just yet. I think it would be a little bit too early to start trying to call tops on euro dollar. However, it could be a play. So yes, the Fed is going to continue cutting rates. However, it's not going to be an aggressive easing cycle. I don't think we're in a situation where we're going to see the Fed continuously cutting, or cutting 50 basis points. I think it's going to be very gradual. Again, we saw that in the dot plot. We also saw that in the press conference by Powell. So euro dollar is interesting. Again, I'm not doing anything with this yet, but this fib zone is looking quite tasty. We are coming up to 1.2, which has been a big eye for the markets over the past couple of months, really. At this point, we've had the ECB already call out the 1.2 level. We've got a lot of institutions that have been long euro dollar over the past few weeks and months. So that could be a possible taking profit level. And then again, you know, if we do see economics stop supporting a euro dollar short, we could potentially turn our attention to that. But again, in the meantime, it's nothing I'm actually looking to take just yet. The dollar, again, on a contrarian view, could be, well, actually, I guess it's not really contrarian, but we are at a pivotal level on the dollar as well. So we've been talking about this 17-year, is it 17 years? Pretty much, yeah, something like that. 17-year trend line that the dollar's been holding for 17 years. And it's been a big topic of discussion. Can the dollar break below? Or are we going to see some miracle recovery? This could be the recovery that we need to see the dollar start pulling back. Now, again, I keep saying again, I'm saying again because I made a video on this earlier, so it's kind of merging together in my brain. I'm not a huge bull on the dollar right now. I don't think it warrants being, a buyer expecting it to go all the way back up to 110 or 115. But I think the foundations are there for that to possibly happen. So I think we're going to see a large expectation of those rate cuts getting priced out. Again, I think people were expecting a bit more aggression from Powell, which we didn't have. And his tone actually was slightly hawkish, in my opinion. So again, I think the foundations for possible dollar longs are starting to pave out, especially now we've had the lower jobless claims the day after Powell was saying that, well, I'm not going to go through everything he said, but yeah, I think we could be maybe a little bit of a turning point in the markets. Again, it's a little bit early to say that just yet, but I think the possibility is absolutely there. I did take a long on silver this morning. I'm not logged into the broker for some reason. I went long, probably around entry at this point on silver. It's only a 0.01. It's a very small position. It's just to dip my toes in and start building a longer term position if we do start seeing it drop further and correct some of this left side that we had. So yeah, I still think silver is a great long position to take on dips. Not financial advice, but yeah, silver is still in my basket of ideas. So in terms of watch list, there really isn't that much that I'm paying attention to be honest, right now. I'm quite happy to just let the market settle today and tomorrow. And then on the weekend, that will allow me some time to sit down and reevaluate where I want to be positioned and what I want to hold in the portfolio. So we were long on Nasdaq, on the Dow. Closed that one just before we had the Fed speech around New York Open. We have seen the Dow have a big correction. Nasdaq also had a little bit, well, not a little bit, had quite a large hit today as well. Although actually, I suppose it's still pretty much at the same price it opened. However, still quite a bit of up and down movement. So yeah, it seems like we're not having much direction or sustained direction in the indices markets. Bitcoin's moving up quite nicely. I'm not involved in Bitcoin, but I am paying attention to it a bit more these days, since people seem to ask for it, analysis on Bitcoin a bit more frequently these days. Dollar Swiss technically looks really good to short here. Well, it's actually broken above now. But yeah, on a technical basis, it did look quite nice to be a seller. However, with the dollar strength that we are seeing today, let me go down timeframes here. I don't think it's wise to be trying to short dollar right now. Again, I think we are in for some possible dollar bullishness in the short to medium term. And then from there, we will have to just pay attention to the direction of the economics and all the data releases we have, such as CPI, PCE, unemployment, NFP, et cetera, et cetera. The trend is still bearish. So if we do get something like this, like a nice pullback to the 200, and we see a confirmation, maybe a bearish daily candle or a bearish H4 candle, I might attempt something with low risk just to see if we can get something going. But dollar short right now is definitely not a big pick for me like it was earlier this week. I'm still very, very sure that we can see the Canadian dollar run lower. Australian dollar has also been taken off my list of being super, super bullish at the moment. I might go into that on the next stream because I still need to flesh out that idea a bit more. But yeah, Australian dollars more on the sidelines. I've not cleared out the watch list fully yet. So yeah, we'll see. But we are seeing these dollar crosses take a real beating today. Can you use it? Can you use the Edge Finder to check Forex pairs for negative or positive swaps? Absolutely, you can. The Edge Finder is like a Swiss Army knife. Code ELITE for a discount, by the way. Yes, so you need to go to Carry Trade Scanner. It's all the way down at the bottom. It's the fourth one from the bottom, and you'll see it right here. So the way this works, I mean, if you're asking about swaps, I'm sure you know how they work. But for anyone that doesn't, it basically takes the interest rate of both currencies. So as you can see here we've got dollar Swiss. So the base currency rate, so the dollar interest rate is at 4.25. The Swiss interest rate is 0. So you get paid to hold dollar Swiss. So that's basically how it works. You can see it very, very simple here on carry trade direction. So the higher the interest rate divergence, either the more you're going to pay or the less you're going to pay. Obviously, if it's higher or lower. But yeah, you can do that in the Edge Finder. It's a very handy tool, actually. So if you are either you're a DCA trader, swing trader, or position trader, swaps are something you should be paying attention to, especially if you're trading with large capital. So I'd say like 20,000 and above, swaps can start to hurt a little bit. Or actually, they can do very, very well depending on which direction you're going. Like when I was doing my Eurodollar short DCA strategy, it was really, really nice because I just got paid to hold shorts because it was negative swaps. In my opinion, look for carry trade scanner only once you have the bias. Yes, absolutely. Again, actually, I think you could do the carry trade or look for a carry trade just based on the interest rates, but you would need to be happy holding a position for a long time. Obviously, again, yeah, that's kind of a rough blanket statement. Of course, it does vary on exactly what you're looking at. But for example, the dollar yen trade we had, the dollar yen carry, or even just yen carry that we saw. Where is dollar yen? Here. It could be a case of you literally just keep DCAing in on trades you'll get paid to hold. Of course, it's not really the best way, especially for retail traders that don't have large capital to continue to layer in positions, but it's possible. There are strategies actually that rely solely on carry trades. They will just buy in and get paid on swaps. Thoughts on indices? Slugmeister, to be honest, I'm slightly bearish on the indices, slightly bullish on the dollar. Now, that's not a long-term idea. This is more just short-term, medium-term thinking over the next maybe a couple of days, maybe a week or two. I really think the markets were disappointed. Well, actually, maybe disappointed is not the right word, but were taken by surprise by Powell's hawkishness, I think. So if we look at what the dollar's been through this year, so basically all year it's had a hammering. So you can see from January, the start of January really, it's just been a waterfall to the downside for dollar. Now, we had lots of different things play in effect here. We had poor economic data, we had capital outflows, we had the trade wars, we also had rate cuts getting priced in all year, and we finally had it. And the rate cut we did have wasn't suggesting an aggressive easing cycle. So I'm curious to see if we do start getting positive data, can the dollar start to recover? Because I was looking at the dot plot last night and the rates remain high. I'm just going to pull it up for you. Give me a second. How can I do this here? Again, I'm sure someone's already gone over the dot plot with you, but if they haven't, this is what the dot plot is. It's basically a forecast of where we could expect rates to be at a certain period in time. So we can see in 2025, it's around 3.6 to 4.1. So within that range. So this year, there isn't that much room for rate cuts, again, just based on the dot plot. Then we go into 2026. It's pretty much the same as 2025. It's around 3.6. Then 2027, we could see it come closer to around 3.1-ish, but it doesn't really go lower than that. And those rates are still high. You know, 3% interest rate's not bad, and it can still help to fuel carry trades, or carry trades with the dollar specifically. Ignore my wallpaper. And also pairing that with the forward guidance we got with the press conference, I think dollar bears have been a bit disappointed by the release. So we might see the bulls stepping in, we might see some bears stepping out, and we could see a bit of dollar fuel coming back. This is just off my personal opinions. It doesn't mean this is exactly what's going to happen. But we will just have to see. It all really, really depends on the data that we get. The Fed did confirm that their priority is the labor market. They said I'm fairly sure they said inflation's elevated, but they're not. I can't remember exactly what they said, but it's not a big concern. They're not worried about runaway inflation. Even the labor market didn't sound overly concerned. Said it is weakening, but remains stable or something. Again, I can't remember exactly what the quote was. So yeah, anyway, sorry, that was a really roundabout way of answering your question, Slugmeister, but I would expect indices slightly lower, dollar slightly higher. Again, just sort of short, medium term, but Yeah, we'll see in the longer term, because again, it's very, very reliant on the data that we get. He said we have a deeper issue at hand. Yeah, but even so, it was a hawkish cut, in my opinion. Regardless, I mean, sorry, I'm just trying to, yeah, here. So I've got the SEP here. God, hold on, let me move back over to this one. So I've got the SEP here. Now the SEP did get called. Sorry, yeah, a reporter called him out on the SEP, kind of, because obviously it's, you know, in 2 years they'll have inflation at 2%. In 2 years they'll have inflation at 2%. Blah blah blah. Anyway, GDP is expected to increase from 2025 up until 2027. No recession in sight, or at least the Fed's not concerned about a recession. Unemployment rate is expected to go lower. So we're looking at 4.5, 4.4, 4.3, 4.2. Inflation was put down to tariffs. Well, mainly put down to tariffs. Employment was, well, not largely, but employment was blamed kind of on immigration. So it just wasn't a situation where we had Powell saying, "Oh my God, you know, labor market is collapsing. We need to cut 25 today, and then we're going to cut 25 in the next one, and we need to seriously bring down our rates. You know, we're finding it hard to stick to the mandate." We didn't see that. So, yeah, again, that's my reasoning anyway for not being bearish dollar right now. Although we had a rate cut, it didn't solidify that the dollar can really move that much lower, at least now. Or yet. So where does that leave me in terms of actually placing trades? Well, I'm going to be honest, I've got no interest in the dollar just yet. I'm slightly bullish. I might attempt a few longs and a few shorts just to see what I can get to run. And then I can double down on what begins to work as we get more data. But right now, as of today, I'm completely flat. I've got, as I said, I've got one position on silver, and we do have a signal open on Euro Aussie, which I'm not going to show you because it's around entry. We placed it this morning. But yeah, I'm quite happy to just leave the markets for the next few days and then chill. United, did you, and I mean this with respect, but did you not listen to a word I just said? A higher cut could have scared the markets, causing markets to crash potentially. Yeah, Slugmeister, it's not about the amount he cut. Everyone was expecting 25 basis point cut. That's not the problem. Or that's not why the markets are moving the way they're moving. They're moving because of the guidance we got. Gold selling off. Okay. So the reason we're seeing gold down is, again, because we're seeing the dollar gain some quite significant value today. Again, keep in mind, the dollar has been getting hammered all year. It's just been a really rough time. So we had the Fed cut last night. It's been highly anticipated. You know, it's been talk of the town. The Fed's going to cut rates. Finally, the Fed's cutting rates, and they did. Great. Okay. Well, again, if it's talk of the town, everyone expected it. Everyone had the positions in. There's no surprise. There's nothing new. There's nothing groundbreaking. So once we've had the rate cut, then what do we do? Well, we need to look at what we expect to happen next. And what we expect to happen next is actually not very much. Possibly another rate cut this year. But again, is that really the worst thing ever? Probably not. It's definitely not what the markets were expecting, I think. Again, I want to highlight, I think, this is just my views. We had relatively hawkish forward guidance. Anyway, I've said the same thing about 5 times, so I do apologize. I put a video out on my YouTube channel today going over the rate decision in detail. So if anyone is more curious, feel free to check it out. But yeah, gold is down basically because the dollar's up. Dollar is up because we've got a hawkish cut. Same thing for you, Nero. US 30 is down because we had a hawkish cut. Higher rates make it a bit more, well, make it more expensive to be borrowing money, making it harder for companies to expand higher, and credit generally just flows less, which is obviously a negative for stocks. So it's not even just a stock problem or a company problem directly. If you've got consumers that are paying more money to borrow money, they're likely going to borrow less money, meaning they're going to spend less at said companies. So it kind of just depletes optimism within the equities indices markets. But I'm saying all of this, but I do want to. I want you to understand that I have limited time here, so I'm not able to go into as much detail as maybe you deserve on these topics. So before you take what I say at face value, I would urge you to go and do your own research on these things. Do you have a level where you'll buy gold and silver? Not really. I'd quite happily buy gold at kind of the next pullback, whether that be, you know, a daily pullback to the previous highs here, and then we see a break and retest pattern. I would attempt that. I would also attempt trying on the H4 if we can pull back to 200. I've got a few different areas in mind for gold. As for silver, I'm just building a position. As I said, I'm probably around entry on my silver position here. I'm not logged into the broker for some reason. My internet cut out just before the stream. Luckily, it came back. But yeah, I've got, I think it's a 0.01 position, lot size position on silver. So it's very, very small. It's just to see if we can get something. If we can get silver lower, I can add in again and start building up my position size. I do expect silver to go to 44 at some point. My timeline has been extended now that I'm not as bearish on the dollar. Just called the whole old dump. Good job, Jaden. You think we're in an AI bubble? Yes, I do actually, and that might be opposite to what you hear some people saying, but I think AI is very, very overhyped. I still don't believe we have AI. I don't think AI exists right now. What we have is machine learning. So AI is artificial, obviously, you know, self-explained, is intelligence is artificial. We don't have artificial intelligence. We have algorithms that memorize and store data and just regurgitate it. I don't think we have AI. And I think the problem is investors have such a fantasy about AI. They invest in so many different projects. Everything has AI these days. You've got language apps with AI. You've got trading platforms with AI. I'm not saying these things are bad, but I'm just saying it's integrated into everything. And some things it doesn't need to be in. And I think it's one of those things that as it becomes more accessible, it becomes a part of day-to-day life. We might see some sort of correction, if that makes sense. So I don't think we're going to see AI just pop and go to zero. However, I think it's held as this holy grail right now that I don't think it is. I think it's great. Don't get me wrong. I think AI is very, very useful, and it does definitely have a place in our lives, and it always will going forwards. But again, right now, I think it's very primitive, and I think it's not really as good as people say. But again, I don't know stocks. I'm not a stock guy. I've never claimed to be. So again, this is just off my day-to-day life observations and opinions. So if you don't make any trading decisions based on that, don't go short Nvidia because of that. I think if you were taking what I said, trying to short these types of companies, you're probably going to lose a lot of money. I've got about 5-6 minutes left. I think the macro is now that unemployment rate gave validity to Fed decision on rate and economic outview. Gold was pricing in more than what actually happened. Yes, Jose, yeah, I would say so. And the investing borrowed money, that's why we got a rate cut. That's not really why we got the rate cut. I think we got the rate cut because the economy needed a rate cut. The Fed has to stick to the dual mandate. They have to pay attention to what they need. I mean, the Fed was very, very reactive, not proactive in what they said. Well, Powell was in the forward guidance. I can't remember, again, I'm struggling to remember the quotes, but he said something like, he basically waits for the policy to not work or something like that and then changes it rather than adapting and flowing with what's needed, which I'm not saying is wrong. Of course, I'm definitely not as clever as Powell, definitely not as well knowledgeable as him. Euro Aussie Slugmeister, I will go over Euro Aussie with you next week. I'm currently in a position that's at entry, so I can't show that just yet. All I will say is that we're looking to go long. Thoughts on dollar rally? I think the dollar rally is a little bit of it's kind of like stress relief is how I'm feeling the dollar right now. It's like we've had all this tension around rate cuts. We got it, and now it's like it's like a deep breath of release for the dollar. So I would expect the dollar to come back down slightly and then continue higher. I'll be quite honest. I wouldn't expect the dollar to now go down to 95. I think would be my cutoff point for the dollar long idea. Again, I'm not actually dollar long. It's just I'm contemplating now, and I'm just waiting for more data to come in to help me form a better outlook on a longer term idea. Share chart settings. Which ones? This one. This one is, so this is just a gray. So it's just one, like multiple ones. This one is 0C142E. It's a gradient, and then the candles are just white. Agreed, I'm rallying till 98.99, then reshorting. Took a beautiful dollar Swiss trade right in this. Really nice, Chris. Good job. Yeah, I think the dollar, I'm hesitant to say, but I think the dollar could be a good long. But it's just how far really is the question. So I think 98, 99, 100 could be an idea. I keep saying it, and I'm going to sound like a broken record, but I'm not going to do anything now until I've got a more clear view to see what's going to happen. If we start getting lower inflation and we see the labor market continue to deteriorate, then of course we're likely to see more cuts come in. If we see inflation continue higher and we see the labor market stabilize, then we're very likely to have a hold. And if we see the labor market continue to heat up and we see inflation continue to rally, then eventually we're heading towards more of a hiking landscape. Again, nutshelled, but yeah, I'm not quite ready to put all my beans in the basket yet. Anyway, I feel a little bit bad because I feel like I've sat here for half an hour and said the same thing on repeat in different ways. I'm a bit annoyed about my Japan trade. I got very bored of this position. I was in some pretty good profit, and then we had 2 or 3 days of just sideways price action. I was like, you know what? With everything that's coming up with the Bank of Canada, the Fed, and the Bank of Japan, I'll just cut it. Anyway, turns out to have been the wrong decision. Yeah, I would have pretty much doubled profit if I just held it, which is unfortunate. Yeah, slugmeister, that's another thing, buying the rumor, selling the news. We did speak about that actually yesterday on my segment here about buying the rumor, selling the news. All the pairs versus yen is really frustrating, specifically Swiss yen. To be honest, Chris, I've been very yen bullish this year. However, I'm not really interested in yen shorts anymore. I've actually flipped to, yen longs. I've actually flipped towards being more of a seller or wanting to be a seller. Dollar yen was the only one really that I was interested in being a longer term holder of, which I'm not really that bothered about now. Swiss yen, I'd actually prefer to be a buyer because I'm not 100% confident that we are going to get the rate hike that the markets expect from the Bank of Japan. It really wouldn't surprise me if we just get another hold. So we're going to see. But yeah, yen to me actually has lost its appeal. And I'm probably 6 months late to that idea, but we're there. I've finally arrived to it. The only thing I've got that remains untouched is the Canadian dollar. That's the only thing I'm still very, very confident about being involved with. Until then, other than that, I've got nothing. Swiss yen long is a much better trade now. Yeah, I quite like Swiss yen long. I was shorting Swiss yen. Where was it? I was selling Swiss yen at the start of the year around here. And I was so confident. I was so sure of that idea. And I was so sure that I had a really good thesis. And to be honest, I did. I really was happy with the idea. And I was on the completely wrong side. It happens as trading. So I missed all of this, and now we're at all-time highs. Now I'm starting to think, oh, actually, yeah, maybe I should be a buyer of this market. I kind of messed up there, but it's all right. I didn't lose any money really on the trades, so it's no big deal. It's just a lost opportunity. Anyway, ladies and gentlemen, this is my time. We are done for today. I'm not sure I'm on tomorrow. I think I am, but I'm not sure. If I'm not, I'll see you next week. If I am, I'll see you tomorrow. Have a good day, or have a good rest of the day. I'll see you all very soon. Stay safe, and don't get margin called. Thank you for watching. Don't leave. You've got Marco on next, I think.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I do hope everyone is doing well. Let me just open all of the windows that I wanted to open. So we're gonna do the Edge Finder and the news calendar. So big news, yesterday we got the interest rate decision. Of course, I do have my chat open on the side, so if you do have some chart requests or questions, let me know in the comment section. But basically, I don't want to repeat what you probably heard for like 3 times today. I'm gonna sum it up. So we had the Fed decision. It was a cut, but it was a hawkish cut. So I'm in the A1 Discord, and I'm noticing a lot of traders are a bit confused. So we got a rate cut, and we got forward guidance about future rate cuts, but the dollar actually gained value and is continuing to gain value today. See, so yesterday we had an up day. We touched 96.4. Up day, and then today we are actually continuing to go to the upside. So what is happening? Well, you have to know that a rate cut was already scheduled. So a rate cut was already priced in. If we go to the FOMC funds rate, 4.25, actual number 4.25. And they gave forward guidance, which was pretty much in line with what was priced in. That would be 3 rate cuts, including the one from yesterday. So 3 rate cuts for 2025. Now, if something is priced in, it is probably not gonna make a massive difference to the price. Okay, so it's probably not gonna be such a volatile event. So the only thing that was left was the press conference. Again, after the interest rate decision, after the forward guidance, we have the press conference. So in the press conference was something that actually moved the dollar higher and that made NASDAQ go down, gold go down, silver go down, euro dollar go down, I believe. And yeah, that's what basically happened. What Powell mentioned is that he is not yet at the point where they want to do aggressive rate cuts. That is basically what he said. So we're just cutting this one time, and we're not going to do aggressive rate cuts. Inflation is still elevated, which we can definitely see. Inflation is above the target. So inflation is above the 2% target, and it is pretty high. It is around 3%. And Powell said that was an issue. So yes, NFP is an issue, but also inflation is an issue. And that is a problem because the Fed can only fix one aspect. So if they fix inflation, they're going to screw up NFP. If they fix NFP, they're going to raise inflation. I can just show you labor, NFP in a downtrend. See, in a downtrend. So today we actually got some okay unemployment claims. We had see unemployment claims at 2:30 p.m. and they were a bit lower than the forecast. So that is basically actual less than forecast is good for currency. So less unemployment claims than forecasted, which is good. You want to see that. And I think it is lower than the previous number. Yeah, lower than the previous number, which has been actually revised a bit. Yeah, revised just a little bit. So that's why you have the DXY pushing up for today. Okay. Now, let me go through the watch list and let me also check out the comment section. Let me see what you guys are saying. Let's see. Okay. Hey, Slugmeister. Hey, Max. No, you didn't spam me too much. I'm going to check out the messages a bit later. No worries. Hey, Random Moz guy. Hey, Leslie, US 30. Okay, well, you guys want to see indices? No problem. We're going to take a look at the indices. But first, I do want to go through the watch list. Right. So, for the NASDAQ, just exploding higher today, going up without me. So, looks like this train is just not slowing down. Am I getting a pullback? Well, I thought I was, but then we just continued going higher. So this is this sort of a market environment, which is called sideways up. So you basically don't get a pullback. You get sideways up. And that is pretty tough to trade if you don't want to buy the all-time highs. And that is my opinion on pretty much all of the indices. If you browse through all of the indices, so the NASDAQ, the S&P, the Dow Jones, Russell, all of them are basically doing this sideways up movement. Now, for my personal plan, that is a problem because I want to get in on a pullback. I don't want to catch the all-time highs, so I cannot really do much. But for someone that is willing to buy all-time highs, that is willing to buy at these levels, it may be a interesting entry. So I'm definitely bullish. I don't see a lot of downside for the indices, but I'm looking for pullbacks, of course. Maybe this support level. So this support level right here, maybe that would be good to execute some buy setups. So gold and silver. Silver has actually pulled back by almost 3% yesterday. So it started to have this pullback. I'm sorry, this reward tool is wrong. I'm going to need to hide it. Where can I do that? Here. So basically, silver. We're getting a pullback, and I'm starting to be interested. I've started to be interested in buy setups. I would like to see silver hit this level of support, and then I would probably take a buy setup, take a stab at going long. Long term, I'm really bullish. This whole market environment is bullish for gold and silver. So as we mentioned, we had NFP going down. We have inflation going up and being above target. We have GDP, which is, I think it's okay. Yeah, it's positive. So GDP is okay. But just that inflation, that pesky inflation is, in my opinion, a problem. So inflation is definitely an issue, definitely a problem. And also, you have to know that the banks are printing money. So commercial banks, I did some research on that. And basically, commercial banks have started to issue a lot of loans, meaning they're starting to create money out of, let's say, thin air. So basically, when they issue a loan, they create it out of nothing. And when that loan gets paid off, that sort of money gets created, okay? So I probably haven't explained it the best, but there is a graph. If you're in the A1 Discord, there's a graph saying commercial banks are issuing more and more loans, and that is in turn creating more money in the supply. And also you have the big, beautiful bill coming up next year, which is going to introduce even more spending, which is going to increase the US debt even more, which is going to increase inflation. So inflation my forecast for inflation is to the upside. And that is why I think getting in on some buy setups on gold and silver is so powerful. So good. If you do want to get access to the A1 Discord, if you do want to get the trade signals, get the analysis, get all of the graphs that I'm talking about, so that US commercial banks giving out loans, and the Trump Big Beautiful Bill, the analysis I did yesterday, I believe, you can get a discount on the A1 Discord and on the Edge Finder with my code, which is MARKO. Okay, so if you want to join, link is in the description of the live stream, and you can use my discount code MARKO, and I will see you inside. So continuing with silver, that's pretty much it. That's pretty much the analysis. As far as gold goes, I think we're still a bit overextended. I think we're still too far away from the 20 MA. I would like to see a bigger, better pullback. So a pullback to, let's say, this level of support. So around 3.5K, something like that. I think that would be pretty high probability to get in. Right now, we are pulling back a little bit, but not enough. So silver looks a bit better. Maybe I will get an entry a bit sooner on silver compared to gold. We shall see. Euro dollar I covered, so wasn't a buy setup. Hit the take profit. Aussie CAD. Now Aussie CAD has actually started to pull back to my possible entry level. So what I really like as a play in 2025. Let's say for these last 3 to 4 months, I like going short on the CAD. So I think the CAD is in some major trouble. If we look at the Forex calendar, we had Bank of Canada press conference. They cut interest rates, so that should be bearish for the CAD, especially if they continue cutting rates. And if you look at the data, GDP for the CAD, negative. So GDP looks really bad. Unemployment looks absolutely horrible for the CAD. Let's take a look. Rising. So rising unemployment looks very, very bad for the CAD. And then you have the inflation, CAD. And inflation is just below the 2% target. Okay, so inflation is, there's not a lot of room to cut rates. You know, if you cut rates, inflation goes up, and you don't want inflation to go above 2% like you have in the United States. And also housing prices. There's a nice graph that I posted in the A1 Discord about the house prices in Canada, which have started to fall down in the last 2 years, I believe. That is a sign of a slower economy. That is a sign of a slower demand for housing. That is a sign of a lower demand for the CAD. So bearish on the CAD. Now I'm executing this short CAD idea through different currency pairs. I have a USD CAD long. That's my first attempt. Okay, USD CAD long. For the USD, my bet was basically what happened yesterday is for a hawkish cut. And I personally forecast that we're not going to go much lower than 96.4. Okay, so 96.4. I think we're not going to go much lower than this level. I think we're going to either range around here or maybe even bounce a bit to the upside because everyone is short. So when all of the retail folks online are calling for shorts on the US dollar, the opposite thing happens. Okay, so that was my first idea. Second one, EuroCAD. This one, I like the euro. I think the euro is doing pretty well. I think the European economy is strong right now, and we're in uptrend. So nice daily chart. I think the top setups page. I think pretty much all of the CAD pairs. So Aussie CAD, yeah, is bullish. Euro CAD, Euro CAD is neutral, okay, but it was bullish, I believe. So yeah, got in a buy setup. I have a pretty big stop loss set. This trade is probably gonna last for a couple of weeks, maybe a couple of months. I don't care. I like this position. I like this this trade. So Euro CAD, and I told you I'm looking for Aussie CAD buys. So Aussie CAD, I'm looking at this support level to buy. Now we went into it, we hit this this swing high. I want to see the price go a bit lower, and then I would look for buy setups. So that is the general game plan, to try and get in a bit lower. Maybe if we touch the 20 EMA, that would be sort of the best area. Why do I like Aussie CAD? Positive swaps. So if we go to the carry trade scanner and we type in Aussie CAD, see, positive swaps, nice divergence of rates. So I would basically receive money for being in this trade, even if the trade decides to be break even for, I don't know, 2 months. So I would just collect the swaps. We're in uptrend, in my opinion. So we are trending above the 20 EMA. This is a really nice impulse, and now we're getting a bit of a pullback. So Aussie, I'm pretty bullish on the Aussie. I think the Aussie right now is a strong currency. It is performing well. The two of the biggest fiscal sinners, two of the most bearish currencies right now, in my opinion, is the pound. So the pound is getting some really bad economic data, and the CAD. I actually think the CAD is number 1, and the pound would be number 2. So that is why I basically have these trades going on. The final one on my watch list is Euro GBP, which is a buy trade that has been running from the 11th of August. Unfortunately, it has just been super corrective, super flat. I'm paying negative swaps as well on this one, which is not the best thing in the world. So basically, I'm holding the trade. So I'm holding this position. I'm seeing what will happen. I got a lot of questions of, will I close this trade prematurely because it has just been super flat? Well, I have the stop loss set. Or sorry, I have the take profit set. So if we do hit that take profit, I'll be pretty happy to get out. Will I get out a bit earlier? For now, no. I'll keep holding the trade. That is the game plan for Euro GBP. I'm still bearish on the pound. I mean, if you look at the Edge Finder, if we just go through the numbers, the latest numbers for the UK have been better than expected. So you can see, let me just see. So we had CPI yesterday, okay, which came in neutral. That's the very short term. But for the long term, if you look at GDP, it is pretty much all over the place. So it doesn't look the best. If you look at the unemployment, GBP, it is definitely rising. So you have rising unemployment in the UK. And then if you look at CPI, GBP, inflation in the UK is rising, and it is pretty high. It is at 3.8%. That is definitely far above the target. That creates a lot of issues, in my opinion. You don't want 4% inflation. Citizens of the UK can definitely feel this sort of an inflation with the increase in the prices. Okay, so let me just close the door because there's like a tractor or something going on. Okay, I'm back. Someone is mowing their lawn. Yeah, GDP sucks right now. Really high inflation. So you're pretty much getting a stagflation scenario. You're getting a stagflation environment, which is never bullish for the currency, right? Never bullish for the underlying currency. That's about it for my watch list. Let me check on the comments. So US 30, I did cover. For the US 30, we are now in this sort of sideways up market environment, which in my opinion is hard to catch buy setups. For the Dow Jones, we have broken this resistance level, which is nice, and we have continued climbing higher. Rate cuts will be the most powerful for the Russell because all of the unprofitable companies will be able to basically get very cheap loans and inflate their prices. But I would like to see a pullback on pretty much everything. So maybe we just continue up for the next 3 months. Could happen. Wouldn't be the best thing for me because I would miss buy setups. But according to my plan, I have to wait. So according to my game plan, I have to be patient. I have to wait for a pullback on pretty much all of these indices. I think we're just a bit overextended. I think everyone is so bullish. I think everyone is buying. So yeah. Oil, let's cover oil. Oil looks a bit flat in my opinion. So oil generally fundamentally moves up if the world economies are doing well. So if world economies are growing, if there is increased demand for oil, if people are, let's say, traveling, if there's a lot of transport, oil prices go up. But also, oil is highly impacted by geopolitics. So geopolitics play a huge part in the price of oil. Okay, and for that reason, I don't like trading it. I think it's super volatile. I think it's super tricky to trade. So I'm neutral right now. Edgefinder is neutral as well. I don't have a bias. Let's see. Bullish. Okay, so we're getting a bullish bias on the Edgefinder, but I am neutral. So I'm not looking for anything on US oil. Done with gold. No, just getting started with gold. So if you're wondering, I already did the analysis on gold, but I'm not looking to sell it. I'm not looking to be flat. I'm looking for buy setups. So that's why I'm saying that I'm just getting started. Okay, so I want to take this time to mention today's sponsor, which is going to be DNA. Okay, DNA funded. So if you guys are looking to increase your trading capital, if you guys are looking to take on a prop firm challenge, we highly recommend you check out DNA funded. So I do have a challenge running. This one is specifically for my ChatGPT challenge, where ChatGPT gives me signals to trade, and then I input them into DNA funded, basically 50K challenge. And the previous performance in testing was, I think, plus 23% in 90 days, something like that. So I decided for the next 30 days or 90 days, I'm going to input all of the trades into a funded challenge. Right now, a bit down, and I do have two trades. Open, so we will see what will happen. If you want to join DNA funded, you can use our discount code, which is A1 Live. And this discount code is specifically for the live stream viewers. So if you use our code A1 Live, you're going to get 25% off any challenge from DNA. So this is just for you guys, for the viewers, and make sure to use the code A1 Live to get 25% off. Disclaimer, if you're not ready, if you don't have a proven trading edge, if you have not live tested your strategy, back testing is one thing, live testing is a whole different thing. Make sure to live test first. Okay, so live test first and then confirm that you have a trading edge. So that would mean you're ready for a funded challenge. Check it out. And now let's get back to our stream program. So Slugmeister says, what's the fundamental outlook on the currency side? General outlook, in my opinion, just for some of the bigger currencies, let me list them here. So dollar, I'm neutral right now, to be honest. I'm neutral. Pound, very bearish. Euro, I'm bullish. Yen, I'm bullish because possibly Bank of Japan is going to raise interest rates. New Zealand, I haven't done research on. CAD, I'm very bearish. Aussie, I'm bullish. And Swiss, I haven't done research on. So two worst currencies, CAD and the pound. Two best ones, I would say probably Aussie and the Euro. Okay, and kind of neutral dollar, yen, I would say. Now on the dollar, I was neutral to bearish, but right now I'm not sure whether I should be so bearish. I think more of a neutral stance on the DXY would be more appropriate. So that is my general plan. And again, that means selling the pound, selling the CAD, buying the euro, buying the Aussie, being kind of neutral on the dollar, and looking at what happens to the yen. So for the yen, I want to see those rate hikes. Whenever you are in all-time highs and no reasonable pullback, how do you frame your target? Well, I don't get in, so I'm not even in the trade if there's an all-time high and there's no reasonable pullback, I wouldn't get in. So I would have no target. I would not be in a trade. For example, on the NASDAQ right now, all-time high and no significant pullback. So yeah, it wouldn't even fit my plan to get in, and I would not be able to make up any targets. Khalil says, could anyone help me profit? If you want help with your trading, I highly recommend you check out Nick's video explaining his trading strategy. It's on his YouTube channel. Just type in explaining my trading strategy, Trader Nick, or you can go to my YouTube channel, which is Marcos Trading Journey. I have a similar video explaining my new trading strategy. Those two videos should give you a great idea on how to build a trading strategy. After that, make sure you join the A1 Discord. And again, you can use the discount code MARKO. Link is in the description of the stream. So that's your next step. Watch the free videos from Nick and me, decide if it is for you, and then you can go ahead and join the Discord. Euro Aussie. So Euro Aussie. Euro Aussie. Euro Aussie is flat, in my opinion. I mean, both currencies are kind of strong, if I'm being honest. Not maybe for the short term, but for the long term. Sorry. Euro Aussie. So bearish reading right now, but I would say that I'm flat. Okay, I would say that I'm flat. And I would not be looking for anything on the Euro Aussie. Sell gold quickly. I would definitely not look to sell gold. A lot of retail people lose a lot of money trying to sell gold, and you have to zoom out. Zoom out and look at this uptrend. What do you think? What is your chance of catching a winning sell trade in this environment? Where can you do it? Maybe here, maybe here, maybe here, maybe here, and here. That's it. You have a much bigger edge if you just buy. So why not just buy? Why not make it easy? Why make it super hard? Why be a contrarian and lose money? You have to know 95% of retail traders lose money. There's a reason for it. It's because they develop a lot of bad trade ideas, a lot of crazy trade ideas like selling gold. So be careful. You don't want to do it, or maybe you do. I don't know. I would not recommend it. What is your long-term outlook on euro dollar? For euro dollar, so I was in a buy setup. I got out prematurely, maybe. I'm bullish. I think we're gonna hit 1.22. I think that is possible. So I'm bullish. I think we can hit this level. I think we can go up a bit more. I did want to get out just to be safe. I'm not sure what is going to happen with the dollar. I'm more neutral. I'm not that bearish. So I didn't want to risk it. But if you want a bias, it is a bullish one. How long do you usually hold the currency trade? A few days, weeks, even months? I usually hold the trade for a few days, I would say. So it depends on the setup. It depends on the size of my stop loss. But I had New Zealand yen buy setup that I held for 2 months. So that was pretty much the longest trade I've ever taken. Yeah, this one. So this one lasted for, I think it was 60 days. Okay, so 63 days. Yeah, that can happen, but most trades last for a couple of days, maybe a week or two, something like that. Do you have your own channel? Yes, I do. My YouTube channel is Marcos Trading Journey. Okay, so Marcos Trading Journey. You can find me on YouTube and some other platforms as well. It's not oil. It's oil, not oil. Okay. Historical tops and bottoms form in September, so I disagree on euro to buy at these highs. Well, look, seasonality is a cool thing. Seasonality works most of the time. We can check out the seasonality index on the Edge Finder for, let's say, the NAS And you can see seasonality in September is actually negative. In October as well. What about gold? Gold seasonality in September is positive. In October, it's negative. What you have to know is 2025 is a bit different. So I've done some research on the topic, and 2025 is full of breaking news, full of Trump, full of tariffs, full of selling of the dollar. Okay, look at the massive sell-off that happened in the dollar. So that kind of kills seasonality. Seasonality usually happens when there is a steady influx of information, when there is a steady market flow, when there are steady trends, when there is very little breaking news disrupting the markets. That is when seasonality works great. In 2025, we have definitely had a much different environment. So seasonality in 25 does not work as well. Mark, when did you start applying fundamentals? In 2025. So I started to heavily implement and heavily rely on fundamentals in 2025. How do you trail your stop loss into profit having a good plan? Well, it is very simple. I just keep moving my stop loss below the swing highs or swing lows, sorry. So as the price keeps moving, you can identify these swing lows and you can just put your stop loss below the swing lows, right? Very simple stuff. You can do it on gold as well. Gold would be a perfect candidate. So let's say you bought right here, which I think I did, and then you would just move your stop loss below the swing low and you would probably get taken out with this one. Or let's say you got in here, you would move your stop loss here and then maybe, you would keep it here and you would get taken out with this candle. So basically, as the price keeps moving up, you just put your stop loss below the swing lows, okay? That is how you do it. You can drop a time frame. If you want more swing lows, you can drop a time frame. You can go on the 4-hour chart. You're going to get much more swing lows, a lot more of them, right? So it's going to be a lot easier to trail the stop loss. But that's basically it. That's basically the raw approach. Yeah, no worries, Gerald. Can swing traders do well as prop traders? I think so. I definitely think so. So swing trading, I think your edge with swing trading is much bigger than scalping, unless you're a crazy scalper at like SMB Capital or one of these very successful real prop firms. If you're just a retail trader, with scalping, your edge is minimal. Okay, your edge is really small unless you're trading events and you have a defined edge. You know something that 95% of other traders don't know, which is tough. You basically don't have an edge. So by swing trading, by going on the higher time frames, your edge is a lot bigger and you can just catch these trends. You can catch the huge uptrend on gold, catch the uptrend on silver, catch an uptrend on the NASDAQ. So it gets a lot easier. And that is why I think you can for sure be a good prop trader, like a fake prop trader, because FTMO and DNA Fund and all of these prop firms, they give you demo money, right? It's not real money. Okay. So will Chris be live today? Chris Pulver? I don't think so. I'm the last guy for today, I believe. And I'm going to be wrapping it up soon. Last question is going to be from Mary Brown. Why buy euro dollars when DXY is going up? Well, I wouldn't buy them. So that is why I exited my position. I was in a euro dollar long. I got out with a take profit. Okay, so I'm out of this trade. And I'm no longer looking for buy setups. I'm not really bullish on the DXY, but I do think it is possible for us to reject or range around at this level. So I don't think we're going to get a lot more downside for the DXY. And yeah, I'm basically being patient with the euro dollar and I'm being patient with the DXY. I just said if I had to give a view, if I had to give an opinion, I would be bullish on euro dollar. Okay, I would be bullish and I would target 1.2. I think that is 1.22. I think that is achievable. Okay, so that's about it. Thank you very much for watching. You can catch me tomorrow. I'll be live streaming tomorrow as well on the A1 channel. Again, if you guys want to check out the A1 Discord, you can use my discount code MARKO. You can click the links in the description of the stream. If you want to check out DNA Funded, get 25% off. Code is A1 Live, and that is just for stream viewers. Okay. Thank you for watching, and I will see you tomorrow. I think I'm at maybe 9 or 10 a.m. Eastern Standard Time. You can find the schedule on the A1 website. So see you guys.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.